Hello, guys. Can you all see me? Hey, hey. Okay. If you can hear me, guys, if you can hear me, can you type me? Let the people stream in. If you can hear me, type me. Okay. All right. We have people streaming in. Cool. Good evening. I know it's 10. It's 10 p.m. And I decided to do this for you guys because I know I've been a little bit quiet, just a little bit. And I know in the past week, right? Very interesting. We saw what's happening on DDOG. We saw what's happening on DDOG, especially after the earnings, and people have been very interested to find out more about this company. And they're asking, hey, so is it an upward dog? Is it a downward dog? Like for those of you who do yoga. Okay, we have more people joining us. Welcome to the show. Cool. Okay, now I just want to do a poll. I'm very, very curious, right? How many of you are investors of DDOG? Type me. Type me, okay? If you're an investor of DDOG, type me. And if you are not yet invested, but you are waiting or looking around the premises or deciding whether to invest after this session with me, type W. W stands for waiting. W stands for waiting. Okay, finally. Oh, okay, I can see it. Laju, hello. Roy. Pauline, hello. Victor. Nikesh. Okay. You still remember Princess Alicia. Bernard, hi. Eskiko, okay, I hear you. Waiting to follow me. Hey, Roy, waiting to follow me. Okay. So some of you are waiting. Some say big fan. I'm Gerald. Hey, Gerald, hello. Waiting. Ah, wow. Hey, a lot of you are waiting, ah. A lot of you are waiting. Okay, John. John is also waiting. Hi, John. Me, Edmund. Edmund is also waiting. Wow. Okay. Okay, and I see a lot of me's also. Jin Hao, Victor, Kent, SK Go, all the me's. Okay, great. Now, very good. Let me show you what has happened, right? It's really crazy, right? I mean, in the past 5 months, ever since March, we have been seeing a flying dog, right? Increase of 300% in the stock. If you think this is crazy, can you type cray? Cray. Okay. Cheng Xing, you're waiting for another drop to add more. Why is really 10? You mean me? Or really 10? Okay, cool. Crazy increase, right? The past 5 months. And then what happened in the recent earnings? We saw, okay, that DDOG, they have beat earnings. Not only have they beat earnings, the company reported 68% growth to 140 million revenues with earnings of 5 cents per share. And investors were not happy. Look at what this is crazy, right? I think Sean covered before. He said that the market is psychotic. It is crazy. Sometimes when you beat earnings, the market is not happy enough, and then they start selling your shares. And then sometimes when you miss earnings, the shares continue to rise. In the case of what? Disney. Hey guys, by the way, can I just give you some context? Okay, if you look at this, earnings of 5 cents per share. Do you know? Okay, let me just put it in some context. Can you guess what was Disney's earnings per share this quarter? What is Disney's? Who is this crayfish? Yeah, it's really crayfish. Okay, it's crazy. Crayfish. Joshua Wong. Joshua. Crayfish. Okay. Guys, I know you're typing cray. Okay, can you I mean Disney was also the hot stock, right? This earnings. And we saw they missed the earnings and whatever not, and the stock price went up. What was the earnings for Disney? By the way, just to give you a comparison, DDOG's revenue per quarter this quarter was 140 million. Yeah, and typically it's around there. Okay, let's take it as per quarter 140 million. Do you know that Disney's per quarterly earnings is about 17 to 18 billion, which is 125 times? Okay, Disney's quarterly earnings are 125 times more than DDOG. And hey, why no one gets what was Disney's earnings per share? Come on, guys. What was Disney's earnings per share this quarter? Anyone want to throw? Their revenues are 125 times of DDOG. Okay? Okay. Yes, Victor. Ta-da-da. Very good. 8 cents. Can y'all see? Okay. For a company that has 125 times more revenue than DDOG, they only had 8 cents per share. So sometimes, the market is just like, whoa, it's crazy. 5 cents per share, they beat earnings and they're not happy. Okay, someone said it right, actually, how I say it, because growth looks like slowing down. Yes, exactly. Okay, so I'm going to be talking about that. What's this? Bernard said, I did a strangle during earnings. Oh, okay, options. I think let's not confuse the audience. Some of them, they don't know what's options over here. Okay, so yes, Jay, how you're right in saying that slowing growth, but for me personally, I don't think that this is a showstopper. Okay, and moving forward, I'm going to be telling you why. So stay till the end of this webinar. Okay, I really think that you're going to learn a lot. That's the first thing, slowing growth. Okay, the second thing, I mean, why slowing growth, right? Because cloud players, basically, they are being more budget conscious now. In the current economic climate, they are saying that, this kind of like digital services is not so essential, and therefore they are pausing. Okay, they are pausing subscriptions, so on and so forth. But I tell you, the numbers don't lie. And moving forward, I'm going to show you the numbers. Okay, now before I move on, there's a lot for me to cover. I'm super excited. Can you guys tell me in this day and age, what is the new currency? Okay, what is the new currency, guys? In this day and age, what is the new... Hey, Lena, Mickey went on holiday, that's right. What is the new currency today? What is the new currency today, guys? What is the new currency? Yes, okay. Marjono says data. Sean says data. Exactly, okay? So in this day and age, data... the Edmund cryptocurrency. Yeah, also lah. But I mean cryptocurrency, it's always fluctuating. So yeah. Okay, that's right. Okay, that's right. So Datadog's business model, the currency of today's day and age, right, is data. And this is exactly the space that Datadog is playing in. I'm not sure how familiar you guys are with the ins and outs of this business, okay? I'm not going to spend a lot of time explaining this, okay, because it's quite complicated in a sense. But just to simplify it, what do they do? Guys, can you type in what does Datadog... John says gold. Yeah, we know, right? Spike in gold. Also, Warren Buffett buying gold now. But anyway, that's a side topic. Okay, can you guys tell me what is Datadog doing? What is the service that they are providing? Can you guys type in the chat? What is the service that Datadog is providing? The name tells it all, data, but what? What? Type it in. We've got lots to cover today. So I would like to move. Data analytics, okay. Data analytics, data observability, okay. Joyce, good. Puffin says cloud. Okay. Yes. So this is some of it. Basically, Datadog, okay, they do monitoring and analytics, right? In today's terms, okay, it's very complicated. The entire space, first there is an infrastructure. So an infrastructure, just think of it, right? You know, when you build a house, when you build a building, what do you see? What do you normally see when you first build a building? You see scaffoldings, right? You see those pipes, those metals, you do the frame, you know, you do the frames and all that before you can start layering the bricks. And after you layer the bricks, then what, you lay the tiles. After you lay the tiles, you put in your electrical pipes. It's like that. The frame of the building is like infrastructure. On top of this data infrastructure, infrastructure is where you have application tools. Okay, it's like your bricks. On top of your application tools, and within your application tools, there are many different types of application tools. Okay, you have some that helps you to integrate, let's say, customer data. You know, some tells you the performance of your different technology assets, your technological assets. So if we were to look at this, right, okay, it looks very complicated, but basically what Datadog does is that it integrates everything, like all your data and all the infrastructure across the public cloud, okay, the private cloud, on-premise, meaning that there are data centers that are physical, right? Physical data centers, they are not stored, which data is not stored in the cloud. They integrate all this to give you analytics, okay, to give you analytics. And what it means is that it allows the IT team, the developers, you know, the business teams to collaborate together. Okay, now I'm just going to show you a video. I hope that this helps you a little bit.
Datadog, it's a monitoring and analytics platform. So what they're doing is they give you kind of a real-time insight into your company's entire technology stack. So you could be looking at all your different servers, applications, all your different cloud-based softwares, and you're seeing it in one spot. So
oh my goodness.
Organization. So you know if something's going wrong, where it's
sorry guys, I just realized
it's basically that key player in
hold on.
transformation and cloud migration, which it feels like every software company we talk about does the same thing, where it's focused on the digital transformation and making it.
Okay guys, I'm so sorry. I just realized that I wasn't sharing my screen just now. Then I'm like, okay, I think that you guys are a bit lost. So just now I had slides. Later I will show you guys, okay? But let's listen.
So what they're doing is Datadog, it's a monitoring and platform. So what they're doing is they give you kind of a real-time insight into your company's entire technology stack. So you could be looking at all your different servers, applications, all your different cloud-based.
Oh, come on. Oh. Okay. Sorry for that. Hold on.
Cloud-based softwares, and you're seeing it in one spot. So it's almost like giving you a bird's eye view of your entire organization. So you know if something's going wrong, where it's at. It allows you to search it, and it's basically that key.
Okay, guys, just be a little bit patient with this, huh? Just be a little bit patient. Sorry about it. Blank screen. Okay, wait. Okay, never mind. I think it's okay. Okay, so basically this was what I was trying to show you guys. Now you can see, right? Yeah, it's laggy. Okay, sorry for that. I really wanted to show you that video, okay, but maybe I'll post the link in the chat later for you guys to see. But basically, what he was trying to explain is that this platform is a all-in-one platform. It used to be, that for different technology, IT players, digital players, they will have many different apps. They will have many different softwares. And in each of these apps, in each of these softwares, in order to get data from them, in order to get analytics to make data decision, you will have to log into one and look at the data, log out again, log into another one and log out again. And there is no way that you can integrate the insights on this different data. For example, okay, if you want to look at user experience, right? Your UX design, where on your page are people clicking the most? Where in your page, are people exiting? If you want to look at that, cross into, how much does that mean? I mean, how much does that convert into in terms of my sales? If people drop out at a certain point in time, how often do they then come back again and spend with my company? Integrating all this different kind of data, and on top of that, looking at let's say the security, automation, looking at how well your cloud platform is performing, whether your cloud is laggy, looking at the latency, so on and so forth. All this, there's so many aspects to the whole ecosystem, right? And what Datadog does essentially is to merge all this. You can see over here in my slides, right? Infrastructure monitoring, meaning your cloud, whether your cloud is performing as it should be, or whether there is lag, whether you have enough space in a sense.
Digital transformation and cloud migration, which feels like every software company we talk about does the same thing, where it's focused on the digital transformation and making it better for customers or just finding your service. But Datadog, they've kind of made it easier and put it all on one platform.
Yeah, I think that even as someone who follows this space, I know you and I both talked about this before, it can be tough to really separate what a lot of these SaaS companies do. And I know that you have some tricks for kind of getting to the root of, okay, who's truly the best-in-class provider here? There are some company metrics that you can help do that with, but I know that you like to ask around the fool for some of the subject matter experts that work in spaces, and you have a couple other tricks for also kind of to the bottom of this stuff with online forums and things like that.
Yeah, so how I'll originally go through an S1 is I'll completely ignore what a company does. It's like I might know, okay, it's a tech company, and I'll look at the numbers first. And when I see over 80% revenue growth and net dollar retention over 140%, a growing customer base, everything about Datadog from the financial standpoint, I loved. So then I back into, okay, now let's find out what these guys do and what kind of competitors there are. So then seeing, okay, with the rise of data, and I think it's going to over the next 10 years, finding companies that can make sense of it, monitor it, and make the digital process easier is key. So then I go to, tech companies.
Okay. Sorry, I know it's a bit laggy, yeah? Basically, I think he was just trying to simplify everything. Okay, just think of it as Datadog being able to just integrate everything in the whole digital ecosystem, okay, and give you the insights that you need. So to them, they claim that they are the first company that has allowed companies to do end-to-end monitoring, from integration of the different tech stacks, so on and so forth. And do you know who are their customers? Do you know who are their customers? Can you type inside the chat, who are their customers? Who are Datadog's customers? Oh, and by the way, while you guys are typing in the chat, right, Datadog's customers, Datadog is really known for their innovation, okay, more than its other competitors. Like 2017, they launched something, 2017, they launched this automated code and microservicing tracing on app performance monitoring. And then they do logging without limit, which is, for example, errors, errors in your system, that's the logging. That's 2018. 2019, UX, right? User experience, meaning how people are navigating through your digital assets, your websites, your apps, so on and so forth. Is it because the experience is very bad, so people are dropping off, they're not spending? So then they added. So So in terms of innovation, right, no competitors have beat DDOG in the pace in which they have innovated. Okay, so can you all type in who is Drew? Yes. Okay, Spotify. Not AT, not Activision, but close enough. I mean EA. Okay, so let me show you. Hey, David is very funny. DDOG is my good friend. Look at my pic and you will know. Yeah. Okay. So anyway, just to show you guys. Okay. So this is just to give you a view. It looks very complicated lah. Okay. This is how their dashboard looks like. This is the metrics, the business metrics. Okay. All this. What's the active user, so on and so forth. And then you have your logs, which is for the errors. And I mean, it's very complicated, but this is how a dashboard looks like in DDOG. And of course, I mean, they go through the whole subscription model, which we'll talk about later. But this is their customer base, okay? Some of the largest players in the world, the largest digital players in the world are their customers. Samsung is the largest provider in terms of unit sales of mobile phones in the world. Okay, EA, one of the biggest gaming companies. Facebook, needless to say, right? We see how their stock prices are soaring. Spotify also, one of the largest music players. Adobe, HP. Okay, so all these powerhouses, they are forming the customer base of DDOG, which is very powerful, right? Now, at this point, guys, can I just get you to do a favor, because I'm moving on to a part that is very important, and I am going to talk about subscription model, because we know that subscription model is the way moving forward. You know, the reason why SaaS companies, right, software as a service companies are such like hot companies, are hot stocks. That's because of the whole subscription-based model. So I'll just pause here for 30 seconds, guys, before I go into talking about the different metric that we look at for a subscription model, okay, which is what DDOG is on. Can you please share this video? And when you've shared, type shared, okay? Because I really want people to learn. And I know that you know, last week people were panicking. Okay, there were people who were entering DDOG. Whoa, it's like a flying dog. And then last week, what happened? Boom, 20% down. Some people were like panicking, like what's happening? Okay, so can I get your help? Yeah, Adobe, exactly. Yes, Drew. David, yes, recurring income is powerful. So, guys, can I get your help to share, you know, before I go on to talking about the subscription model, okay, and what are the metrics? Thanks, Cha Yong. Thanks for sharing. You sing. Yeah. Drew, thanks for sharing. JC is invested in DDOG. Yeah. Yeah. Same way, shared. Cool. Awesome. Cool. Eileen, thanks for sharing. Okay, great. We know, right, that for DDOG, the way they make money is very simple. Okay, it's a subscription model. What does a subscription model mean? Okay, the pros of a subscription model is that they get more and more customers on board with with minimal variable cost, meaning that your profit margins just keep increasing and it becomes very powerful because it just adds on, it stacks on top of each other, which I will show you all a graph later. And for DDOG, okay, what's even more powerful is that it charges the customers based on usage. So the more users, the more the customer's employees are using the platform, the more the customer pays Datadog. And guess what? These customers, they have no choice but to pay, because what this platform does, remember just now I was telling you guys that they integrate the different apps, they integrate the different layers, different technological layers. They integrate all, all the different clouds, whether it's on-premise data, you know, whether it's public cloud, private cloud, so on and so forth. And what they do is to break the silos between the IT ops, between developers and between business owners, which means that all these groups of people will have to subscribe to Datadog, okay? So they have a powerful subscription model. Now, before I go on to talk about what metrics we are seeing in terms of Datadog's performance in a subscription model. Can you tell me what do you think matters? What are the key metrics that you look at in a subscription model to say that this is a strong revenue model? What is the metric to tell you that this company is doing well? It is healthy. Can y'all type? Stickiness, yes, very good. Who is this? I cannot see your name. You all must like. Stickiness. What else? Oh, is that a hang? Oh no. Yes, recurring revenue, but what is in what? What about recurring revenue? Like, what is the metric? What is it? What is it? What is it, guys? What are the metric that will tell you the health of this recurring revenue model? Retention rate. Yeah. Retention rate. Very good. Hey, Scott, retention rate and upselling. Very good. Okay. I see that some of you understand. Okay, so let me move to the next slide. What's important in a subscription model? First, customer acquisition cost. Why customer acquisition cost? In any business model, customer acquisition cost is, of course, very important, but more so for a subscription model, for a recurring revenue model. Why? Because at the end of the day, your customer base, the size of your customer base drives the potential of who stays on your platform and pays with the years and just stacks up. Okay? Let me show you this graph that you see over here. Let me explain this to you, okay? So this chart basically tells us how many months, okay, the various SaaS players, so software as a service and subscription model players, take in order to recover all their marketing costs to acquire a new customer. Okay, so Datadog, okay, it is really the best of the best. They are in parallels. I mean, they are neck and neck with Zoom, but you can see, right? Datadog only takes 10 months to recover all of its marketing costs to acquire its new customers, as compared to the average of 30 months. So it's really, I don't know whether you guys understand this, okay, but this is very powerful. They are taking 1/3 the average time in order to recover back their costs. And therefore, later I will also show you in their finances, how come they can be profitable in such a short period of time? And that is why, for Datadog, when they IPO'd last year, till now, do you know that the stock prices are already times 4, times 3, times 4, right? Since the time they IPO at 27, and they are really like the hot stock in the SaaS space. They are known to be the one that could possibly grow to become the giant because their revenue model is just so strong. Okay, their customer acquisition cost, which is a big bulk of the cost, it's only 1/3. Okay, it's 1/3 of the average of the industry. Okay, the second one is dollar-based net retention rate. So just now, Scott, you are right. Okay, Scott mentioned just now, he said retention rate and also how much you can upsell. So this is a very, very powerful thing. Let me show you guys, okay? Okay, so this model over here, the different colors tells us the batches of customers that are coming on board DDOG and how much they are spending on DDOG's platform. So you can see for batch 2 or batch 3, okay, 2013, you can see, right? Those customers in batch 2013, their revenues, their spend with DDOG is growing. Same for 2014, it's growing. It gets larger and fatter. Same for 2015, 2016, 2017, 2018. Okay, so what they are trying to say, right, is that their customers are spending more with them. And let me tell you, it is very powerful. This last quarter, they reported a more than 70% increase year on year in the number of customers who are spending 100K or more with them. Okay, so their biggest customer pool grew more than 70%, and that's a very strong number. Okay, their dollar-based net retention rate, it was 137%. For the 11th straight quarter, meaning for 3 years, right? For 3 years straight, almost 3 years, their net retention rate is not only 100%, it's more than 100%. What does it mean? This dollar-based net retention rate takes into consideration your number of customers and also the amount that they are spending with you. So net, okay, not only are they not losing customers, they have new customers coming on board. Not only do they have new customers coming on board, guess what? The customers are spending more with them. Okay, and this was what was reported just last quarter, and this is what is being seen every single quarter for the past 11 quarters. On top of that, Datadog has always been expanding its product offering. So as of last month, maybe before I tell you, can you guess how many percent of Datadog's customers are spending on 2 or more Datadog products? On 2 or more Datadog products. How many percent of their customers are spending on 2 or more of their products? Can y'all make a guess? Yeah, Joan, I will explain that later. Okay, can y'all make a guess? How many percent, guys? Hey, good guess. Hey, Chicken, can it be more than 100%? 100% is the full pie. Hey, you're very, very good. Okay, very good. Yeah. Okay, so actually, yes, Bowie, you're right. Okay, more than 80%. More than 80% of their customers are using 2 or more Datadog products, and this is a 40% increase year on year, meaning that their strategy, they have this strategy called land and expand. Okay, it's called land and expand growth model, meaning they get people in first and then they expand their spend with the company. So their cross-selling, as what Scott said just now, is really, they're very successful, basically, okay? They just win the customer and then they start cross-selling the product. More than 80%, okay? So these are just some numbers, okay? More than about 40% new customers, yeah, and then more than 80% use 2 or more of DDOG's products. Having said that, just now someone pointed out clearly and rightly that the growth is slowing. Okay, but I am not so concerned about that. One reason why it's slowing is because of the travel players, hospitality players, but there's only a small pie. It's like if I'm not wrong, it's a single digit. It's a small pie of their revenue. And of course, with the economic outlook, companies are more stringent with their spending. Having said that, guys, if you look at the Googles of the world, at Apple, at Facebook, Microsoft, so on and so forth, right? If you look at all these high growth companies as well, their growth over the years, right? When you first start out, their growth all very high. But over the years, it just keeps tapering and tapering and tapering and tapering. Why? Because the denominator just grows bigger and bigger and bigger. So in order to beat your previous growth, the numerator, which is your absolute growth, has to be even larger. Okay, so each time it gets even harder to beat the previous time's growth. Okay, so to me, I personally don't think that this is a key concern because 68% growth from the last time, it's still super strong. Okay, I have a corporate strategy background. I've always done corporate strategy for the largest, biggest MNCs. Okay, and 68% is just very high. Yeah, it's really just very high. And something about DDOG's CEO, right, is that they tend to be very conservative, and therefore their estimates that they give, right, the outlook that they give tends to be more conservative, and they typically beat it. Okay, so I prefer like management like that than one who, promise the world and then under deliver. Okay, so having said that, this to me is not a big concern. And then we know that what is driving the future, as long as the cloud business is moving, and later I will show you guys some data as well. Okay, basically DDOG, they thrive, right? As long as cloud is growing, we see how AWS is exploding, right? Amazon Web Services, their cloud. We see Alibaba, we see Microsoft, right? Their cloud services are exploding. As long as the cloud space is growing, as long as data analytics is growing, okay, DDOG's business is just in the right space. It is the now and it is the future. Next. You see, in terms of the net dollar retention, which is what I just went through, do you know that amongst all the top and hot SaaS players right now, do you know that DDOG has the highest net dollar retention? And that's very powerful. This is your money. This is the truth. Okay, this is the truth. Now, what else is driving growth? Can you guys guess what else is driving growth? Junhao, you are right. More than 15%, 15% are using more than four products or more. Okay, what else is driving growth, guys? What else is driving growth? And at this point, yeah, what else is driving growth? Okay, let me just give you. Number one, new customer segment. Okay, you can read this whole chunk, but basically they have upped their features, their technology, such that they are able to now deliver services to the US federal government departments and agencies, guys. They are now serving the government. Previously, they are serving only the private companies, right? But now, because they have this feature, it's called a FedRAMP, okay, but whatever it means, right? They have a new customer base. Powerful. And can you imagine the government using it? Like, yeah, okay. The second one is new product features and enablements. As what I mentioned just now, every single year they're coming up with new product innovations. This first product innovation basically gets them earlier, in the software cycle. What does it mean? In any product, there is always a life cycle. Okay, there is always a life cycle, whether you are in the consumer goods industry, whether you're in software. Whenever a customer uses a product, the moment they have that touch point with you, that's when their life cycle starts. So DDOG used to be like parked in the middle. Okay, now they're moving themselves to the front of the life cycle, meaning that they can monetize more. There is more for them to monetize. Better tracking of the integration. Okay, and identify issues before reaching production, meaning that as they get more competent, as there are more features, right, they can also sell. I mean, there's more for them to sell. You see, proactive monitoring of internal applications, they are not accessible from the public net. Just now we were talking, right, how this service is able to cut across public cloud, but also private cloud. Okay. Okay, and then this is a big chunk, but basically new integrations with AWS and all their different partners. And what's so powerful is that when you're able to have new integrations, when you're able to have new integrations, it means that you become more and more of the market leader. You enable that analytics, you enable decision making. Okay, and what is most powerful for organizations is when you're able to see a dashboard very clearly with all the key indicators across your business to make decisions, right? And this is exactly what DDOG is doing, and they're increasing the number of integrations that can be done. Very importantly, okay, and user approval, guys. When you sell a product, okay, many companies in the past, they used to do product push. This is what we can do. So then they do the product and then they sell it. But nowadays, the market is no longer like that, okay? It needs to be customer-centric. It needs to be customer-centric. And do you know that DDOG actually was recognized as the Gartner Peer Insights Customer's Choice? That means their customers, their own users, actually voted for them as the top choice amongst all the other players. This is the most powerful, what's that, validation, you know? I mean, yeah, internally you can say that you're very good, right? But other people outside, those who are using your products, can say that it sucks. Then it doesn't matter whether you say that you're good or not. What matters is what your user feedback. Okay, so they feedback 4.5 stars out of 5 from 92 of their customers. And the database is good enough, right? I mean, we talk about all the significance and so on and so forth. Partners approval. Okay, so remember, DDOG has many partners. They're doing a lot of integration, correct? There's a lot of partners. They won the best mission-based data solution as part of Amazon's Web Service Public Sector Partners Awards. Okay, they have all these different recognitions. So basically they are growing in the customer segments. You know, they are coming up with new product innovations that is making this platform even more powerful. Not only are they claiming that they are powerful users, their own customers are claiming that they are powerful. Not only are their users claiming that they are powerful, their own partners, you know, are claiming that they are great. Okay, so it's like 360 feedback, right? 360 feedback. What else is driving growth? Okay, what else is driving growth? Now, look, cloud players, cloud users, they use DDOG, right? To monitor the cloud performance, to look at data, to look at security, Okay, all the various applications also. And what DDOG does, the bread and butter of its business, is to integrate all these applications so that it gives you insights, right? Do you know that today, only 25% of application workloads are currently run in the cloud, meaning that they're running in the cloud, and these are the potential DDOG customers. Only 25%, okay? This is expected to reach 49%. That means almost double by the end of 2023. And of course, this is unlike cloud providers. DDOG is cloud agnostic, as what I've explained just now. Whether you are private cloud, public cloud, whatever, okay, the service cuts across, and it has 400 plus integrations on its list. Now, okay, this. What else? Here. According to Gartner, okay, it is a tech researcher, credible tech researcher, spending on IT operations management. So this industry that DDOG is playing in is the IT operations management, is expected to reach 37 billion. 37 billion, guys, 37 billion. How many percent of this 37 billion has DDOG captured? Can y'all do a calculation, right? Its quarterly earnings was 140 million. 140 million times 4 divided by 37 billion. Can someone do a calculation for me? Can someone do a calculation? Can you guys do the calculation and type in how many percent of this 37 billion estimated market size has DDOG captured? I mean, of course, we haven't forecasted into 2023, right? But let's say the current one, 140 times 4, 140 million times 4 divided by 37 billion. Can someone do a calculation for me and type it in the chat, please? What is it? What is it? What is it, guys? How many percent is that? How many percent is that? How many percent is that? John lost count on a number of zeros, yeah. Okay, I tell you, it's like, hey guys, can you do the calculation for me or not? Okay, I'll tell you something. It's 1.5%. Okay, it's it's 1.5%. Okay, they have so much room for growth, and therefore it is a hot stock, because just now you saw the net dollar retention and all that, and it's being approved by its users, approved by the partners. It's growing, growing customer segments, so on and so forth. It makes it such a compelling case. Okay, that is why it has been like, it's been like a flying dog. All right, now we are at this part where people are very curious. So should you invest in this hot dog? Okay, should you invest in this hot dog? If you say yes, type yes. If you think no, type no. Okay? at this point, do you think that it is investable? Maybe not should you lah. Do you think it's investable? Those of you who think that it's investable and you're in, if you think that it's investable, type yes. If you think that it's not investable, type no. SK Go says yes. Ju says yes. Anyone else? Chicken says yes. Puffin says yes. Oh, a lot of people say yes. What if I didn't tell y'all the full story? Y'all believe me that? Do your own due diligence. Damien says yes. Laju, yes. Wow, okay. Shin Yi already invested. Yes, of course. Okay, I see everybody yes. Edmund. Okay, Edmund says not sure. Very good. Must do own due diligence, okay? DDOG is growing so much faster than Splunk. Yeah. David, yes. Okay. Now, before I go on to this part, once again, guys, I know that we have new joiners in this place. Can you guys help me to share this video? Okay, before I move on to talk about whether it's investable or not, can you guys help to share this video? Can you guys help to share this video so that people can learn? Because as you guys saw just now, okay, I think many people do not know what are the developments of DDOG. Many people do not know what are the key metrics to look at in terms of a subscription model. Okay, so please help to share. Okay, Facebook user says overvalue. Raymond says how to value them. Okay. Yada. Who's the rival for DDOG? Good question. Okay, so Puffin, right? It's new rival. Oh no, new rival. New Relic. Okay, later I will show you. There's Dynatrace, New Relic. Maybe I can paste this for you. Okay, so while you guys type your answers and use this time to share the video, maybe I can show you I can show you the competitors. Okay, but I think it's not very meaningful to go through the competitors at this point. I do have a chart on it now, okay? It's not very meaningful. Why? Because in order to compare, right, you really have to go down into the technicals. There are, comparisons done by developers and all that to rate them on all the different technical all the technical aspects and technical features, but I really don't think that will be meaningful, okay? At this point. Yeah, Laju. Okay, so maybe I can show you. It's okay. You can see. Okay, Datadog. I mean, that's how they classify it in this particular research. But it's commonly known, okay, that Elastic, Splunk, Dynatrace, and New Relic, they are the most common players. Okay, they are the closest competitors, basically. They are the closest competitors to DDOG. Okay, they are the closest competitors to DDOG. And then later I'll also compare some of the financials and show you. Okay. So hi guys, have you all shared the video? So that we can move on. I hope that it doesn't hang on me now. Okay, if you have shared, type shared. If you have shared, type shared. Okay. Okay. So, just want to show you. Let's go into the financials. Okay, for DDOG, Datadog. Okay, so you can see over here. Wow, man. Look at the revenues. Okay, the revenues, we know it has been growing tremendously. I mean, it was growing at 98%, 89%, 68% this quarter. Okay, their gross margins are also like fantastic, 78. You know what I mean? Like typically we say like gross margins. I mean, come on. Look at their, okay, yeah. So their gross margin, 78%, and it's growing, right? I mean, it's growing a little. Yeah. And guys, can you see a company that is so young already has free cash flow. Do you know the reason, once again, the reason why DDOG is such a hot stock is because of its revenue model. There are not many companies, okay, that has just recently IPO'd that have free cash flow even, okay? Yeah, that's the thing, okay? They have $45 million of free cash flow, which is great. And then what else? Their net margins, they have turned profitable, okay? So in the past 12 months, they have turned profitable. And that's a very short period of time, okay? That's really a very short period of time. If you look at the Spotify's, you know, if you look at some of all these like internet players, right, you will know that it takes a very long time. Come on, what is the stock that is soaring like crazy? I mean, all the different ones, Fastly, right? Let's say, all the different SaaS players, they are still not profitable yet, but DDOG is already profitable. Okay. Yeah, you can see the growth. Let's look at their financial health. And their debt to equity is so low. I mean, it's 0.67 for a new company, right? And with the kind of cash flow that they have. Yeah, so I mean, all these very simple indicators basically tell us that financially it is really strong. It is very strong, you know, for a company that has just IPO'd not too long ago. Now, if we look at the valuation, right? Okay, and this is the part, okay, before that, let me just show you guys this. Okay, so okay, just to give you guys a sense of comparison. So just now, you know, I was telling you that Elastic, Dynatrace, Splunk, New Relic, they are known to be the closest competitors to Datadog, right? All this different integration. But do you know that in terms of revenue growth, okay? I mean, of course, we can say, yeah, it's not just revenue growth, but it's profits. But you guys saw it for yourself, huh? Datadog is already profiting, okay? And I think, to me personally, new company that just IPO, it's great. Now, so compared to all its closest competitors, it has the highest revenue growth. And just now we saw that this revenue growth is not driven by nothing. Okay, it's driven by two things, right? Growth in the customer base and growth in the spend per customer. Yeah, okay, great. Thanks everyone for sharing. Now, I mean, like I only just saw the comments. Okay, the next one. Gross margin. Okay, so their gross margin is slightly less than Splunk and Zoom. But you see, Splunk, the growth is like, the revenue growth is like crap. I mean, yeah, they only have like 6% more gross margin, but their revenue growth is like, well, it's like 30%, okay? So Datadog has slightly less revenue than Splunk and New Relic. Okay, New Relic is different. New Relic has been in the industry for 5 more years, okay? Then I think around 5 more years, a couple more years than Datadog. And in terms of the revenue and all that, it's also a lot higher. Okay, and therefore they have the economies of scale, so on and so forth, and their gross margin is indeed higher. But if you look at their growth, right, it also like, it's like 30%. So the gross margin, right, Datadog, they have less than Splunk and they have less than New Relic, but it has more than Dynatrace. Okay, so that's just a comparison. Now, let's go back to valuation. So this is in terms of the financials. Just wanted to compare side by side with you. Okay, now, valuation, right? Let me see if I can. Okay, we can see. What do you guys see over here? What do you guys see over here in terms of the valuation? Oops, sorry. Carol, the net income was negative because it was still in investment phase. Okay, just like any other company, you always have to go through investment phase where you're burning cash. Some companies burn more cash than other companies. For DDOG, it's super good. It was only burning cash at 3%, which is really, really good. Okay, you go and look at other financial models. Let me just show you. Okay, let me just show you. Okay, look. Spotify. Oops, it's so slow, my computer. Morning star. You know, Spotify has been a while for, it's been here for a while, right? And so many people use Spotify. It is also, I mean, it's almost like it's a subscription-based model, right? Let's see, okay? Let's see. Let's go to, oh no, it's so like zoomed in now. Pardon my very, very laggy computer. Why is okay, guys, this is really not working. It's not okay, never mind. But if you can, okay, if you can, just go to the financial statements of Spotify. I'm using Oprah. Renfa, yes. I'm using Oprah. Maybe I shouldn't the next time. Okay, okay, finally it's here. Come, let's go. I want to show you guys something. Just gotta be a little bit patient. Can you see? Oh my goodness. Guys, look at this. Can you guys tell me what you're seeing in terms of net income? Can you guys tell me what you're seeing in terms of net income? This is Spotify, that has been around for years and years and years, okay? Subscription base, well used, well known, but look at that. It is burning cash like crazy. Look at this. Negative. 320 million is still all negative, okay? It's still all negative. Over many years. Okay, going back to Datadog, can you see why people are impressed with Datadog? Okay. Yeah. So now in terms of Kevin, why you lost? Kevin, why you lost? Okay, so basically, right, I mean, just now I was just trying to answer one of the Carol's question. Carol was asking why the net income negative for past 3 years. Okay, so just now we saw that the net income for Datadog over here, you can see for past 3 years is negative. It's burning cash. It's in the investments phase. Okay, it's in the investments phase. So now it's already profiting. Can you see? Can you see the net income has profited already? And this is only 3 years of burning money. Can you see that I'm just comparing, okay, to Spotify that is so well known, you know, the brand is so strong, it's also a subscription model. It's been burning for already 6 years and counting. Okay? For Datadog, it's 3 years, and then they became profitable. For Spotify, which is like a SaaS subscription, I mean, which is a subscription-based model, it's like 6 years. And then it's still like a big investments, okay? So back to this, okay, talking about valuation. Now, if you guys tune into our tech workshop couple of weeks, like last month, right? We know that we always have to look, I mean, in terms of all the new companies, right? Price to book is something that Sean himself has, I mean, Sean went through, I think like 60 over companies, 30 over years of data for 60 over companies. And at the end of the day, his conclusion was that a good way to look at valuation is the price to book ratio. Okay, and the price to book ratio right now, the current price is trading at double of last year. So of course, it's quite expensive, right? Also in terms of the price to sales. Let me just bring you this comparison, okay? Okay, don't look at all this first. Just look at this. Just look at this. This one. Okay. This was last quarter's data. But if you look just at price to sales, right? Let's say we use price to sales, which is, I mean, like not the best line in a sense. We normally look at price to book. Okay, price to book after all the studies. Datadog is significantly higher. Okay, let's look at Splunk. So Splunk is another one. Okay, this one that I'm circling around, right? Splunk is another one that people investors are really looking at. Okay, investors are saying, oh, you know, it's very promising. So let's see what is Splunk's okay, let's see what is Splunk's financials. Okay, I mean in terms of its valuation, price to book. Just be a little bit patient. Be a little bit patient. Okay, so for Splunk, okay, so Splunk normally, you know, there's a debate going on. Should we invest in DDOG or should we invest in Splunk? But of course, we saw that Splunk's growth really like sucks in comparison to DDOG. Okay, DDOG is growing at like 60 plus, 80 plus, 90 plus, but Splunk is like half of that or onwards. Okay, so you can see for Splunk, actually its price to book is 17.35, which is actually half, right? Half of DDOG. Where is it? Here. Okay. No, actually, okay, not half lah. DDOG is 27, right? And Splunk is 17, right? So of course, DDOG is trading higher. I mean, it's selling higher as compared to Splunk. But why? Because its growth, okay, and its customer base is so much wider. And this is the reason why at this point, okay, seeing the comparison between both and just looking at the growth, Splunk's growth is like 30%, DDOG's growth is 60 to 90%. You know, DDOG has all these investments and the big players, right? I know some of you are new. I mean, you just joined in the past, I don't know, past 15 minutes. At the start, you know, I was showing them that the customer base of DDOG is very strong. Okay, it is like the Adobe's, okay? Spotify, Spotify. What else did I say? EA, right? Electronic Arts. HP, Samsung, which is the largest mobile provider in the world. So on and so forth. All these big players are the customers. Okay, so now looking at the price to book ratio between we cannot use PE for this. Okay, we cannot use PE to evaluate because obviously their E is very low. Because they're still a very young company. So okay, so looking at what we saw just now in terms of the valuation, so Splunk is 17 and DDOG is 27. Do you guys, those who type yes, are you still going to invest? Do you still think that it is worth investing in? Can you type yes if you think so and no if it's not? If you think that 27 price to book ratio is investable, can you type yes? Can you type yes? And if you think it's not, type no. Okay, just now I saw a lot of you yes, right? After hearing my convincing speech, right? On, you know, DDOG doing this. Okay? John says yes, fundamentals are strong. Great, I like the conviction. Anyone else? Okay, just now so many people type yes. Ray says yes. Puffin says yes. Justin says no. Justin says no. Okay, good. I mean, you guys must like form your own conviction. Bon Xian Huang says no. Chun Wei says no. And because you talked about tip for one. Yeah, I know. I thought much of like I'm selling this. No, but no. This is not a stock tip. I mean, this is not like a stock recommendation. Okay, please do your own due diligence. Okay. So many of you still say yes, which is great, right? I mean, at the end of the day, that's what you believe in, and you stick with your conviction. I just want to show you. Where is my slide? Okay, here. So I just want to show you guys that actually there is this, but I'm not going to cover it in detail, okay? But I just want to introduce you this valuation method. You know, for fast growth SaaS companies, there are some investors, okay, who use what they call the next 12-month ARR, which is annual recurring revenue multiple. So they will take the current ARR, okay, the current annual recurring revenue times 12, and then they will do a ratio, which is what is the enterprise value over this next 12 months run rate. Okay, but anyway, it's a whole mouthful. What they are saying is like the likes of the SaaS companies like Zoom, like CrowdStrike. Okay, they are trading between 20 to 25. You can see over here. So 20 to 25, that's CrowdStrike and Zoom. Okay, and then others like Elentia, Slack, right? Dynatrace, right? So Dynatrace, Splunk, which are competitors, they are trading at 7 to 15 times, okay? 7 to 15 times of this particular ratio. Now, let me just share with you very quickly. In order for DDOG to be worth what it is worth today and be trading in equal valuation of this ratio that I just talked about, within the 13 to 18 next 12 months AAR. So here you can see other fast companies, right? They are growing between 40 to 80%. So for DDOG itself, it needs to grow around, I think, 80%, okay? Around 80% year on year, which is actually very, very super high growth. Okay, it is very super high growth. It needs to hit that 80% year on year growth in order to be trading at a fair value of what it is now. Having said that, typically for such players that has seen super high growth and is in an industry that is really booming, some investors do not mind paying a premium. Okay, so at the end of the day, do your own due diligence. Can everybody type DYODD? DYODD. Can you type DYODD? DYODD? DYODD. Okay. So and also just a caveat, okay, when it hit its all-time high at 95, okay, 90 to 95 or 88 to 95, there was quite a bit of insider selling that was going on. Okay, the CFO, the CRO, all the C-suites lah, okay, they were liquidating their stocks between $88 to $95. Some of them, even at the mid-80s range, they were liquidating their stock. What does it mean when an insider liquidates the stock? And an insider knows the best, right? If an insider thinks that at 85 to 95 is overpriced, then I think we better not be buying at 85 to 95, okay? But recently, when it fell to 75, I personally think that it was a good opportunity, okay? I personally thought that it was a good opportunity. Now, those of you who haven't typed DY, okay, yeah, DYOD dog, exactly, DYOD dog. Okay, so now having heard what I said about the growth, okay, about valuation, about insiders, how many of you will go and do more homework on your own? Can you type H for homework? H for homework, or you will go and do more thinking. Okay, and how many of you will say that right now at this price, actually, what's the price now? I mean, Think or Sim has been having some troubles. Actually, I wanted to show you guys the technicals. Okay. I wanted to show you guys the technicals because I think it's quite interesting. Right now it's trading at $83. Okay, it's trading at $83. It's very exciting. I'm gonna ask you guys. Okay. Yeah, so John says age. Some of you say age. Okay. Okay, good. Okay, so just take note at the end of the day, do your own due diligence. But I hope that this session has helped you to understand not only what DDOG does, okay, but what is subscription revenue all about and the future of growth. And not only that, comparing DDOG against its competitors so that you have a better idea, okay, of where it stands in the landscape. Now, guys, if you have learned something, can you please smash the love button? Smash the love button, guys, and type learn, okay? Smash the love button and type learn if you have learned something in this session. Can you type learn? Yeah. And it's like great job, you guys are like staying to 11 p.m., which is great. And here I am with you guys also, on a Wednesday night. Could have been doing something else, but we are here dissecting stocks. Great. Okay, you guys are investing in your learning. I think it's very, very, very important. It will help you. Okay, definitely it will help you. Yeah, please smash the love button. For those of you who have not shared, please share it. Okay. Learned. All right. Awesome. Okay. Hey, by the way, if there's any of you are interested, because I did one session, right? I did one session sharing my past trades, and it was crazy. I mean, like the views were crazy, the shares were crazy. There were people, like after the session, PMing me and asking me like, hey, are we going to do that session again where I share with you my real trades, my real past trades? If you are interested, right, for me to do another session where I will share with you my trades for the week, right, my past trades for the week, can you type, what should you type? You type RT, okay? RT, real trades, RT. Can you type RT if you're interested for me to hold a session where I dissect my real stocks. That means you get to see the exact prices that I enter. I share with you exactly why I enter them in terms of the fundamentals and in terms of the technical analysis. If you are interested, can you type RT? Okay. Okay, if I see enough RTs, I will do it for you. I will do it. RT, yeah. Okay, cool. Cool. Okay. Fortune phone, yeah. Okay, yes, last but not least, if you have not followed me on my Facebook page, okay, you can follow me at Felicia Fong, the investment and business strategist. Don't add me on my personal page, please. Okay, and you can also follow me on my Telegram for instant updates. And there are also some polls and some things, some content that I share on my Telegram that I don't share on my Facebook page. Okay, so do follow my Telegram. You can see the scroll over there. That's all. Okay, I hope that you guys learned. Yeah, I see RT, I see learn. So thank you for staying with me till 11 p.m. on a Wednesday night. Have a good rest of the week. Yeah, if anything, you can always type questions in my page or questions in the endless page. And I will see you. Have a good night. Good night. Rest well.